Good evening, everyone. How are you? I hope audio and video is okay. Should I start that? Good evening, everyone. Okay, everything? Okay. Good evening, everyone. We'll try these questions later on. I hope you have noted the answers. So I'll discuss up to here later on. Let me start something new with you. And then I'm going to follow with that. Any questions, guys, before I start? Whatever we have done it yesterday. Any questions, guys? No? Just allow me a minute. This is all you have done. Now, I'll talk about OPR. What is OPR? OPR is Office of Professional Responsibility, OPR. To assist in the regulation of the tax practitioner, IRS has established Office of Professional Responsibilities to oversee the tax practitioner and the in appropriate cases the application of the disciplinary actions to improve the professional conduct of the professional. That means if anyone, whether EA, whether CPA, whether attorney, or anyone who is practicing before the IRS, if these guys have done anything wrong, then OPR can take the actions against these guys. So this is established by the IRS. OPR is responsible for licensing the EA and investigating the allegation of the misconduct. If someone has put an allegation against you for the misconduct, in that case, they will investigate in that case. And negligence brought against the EA, attorneys, CPA, registered DRPs, and other professional practicing before the IRS. So that's the authority, everyone, which is going to take the actions, which is OPR. Point here. Next we discuss today is going to be privilege communication. Privilege communication. Privilege communication. Have you heard about privilege communication, privilege conversation, privilege information? In anywhere where you have heard it. For example, everyone, if this is the person who has been accused of murder, and this person is going to meet the lawyer, his lawyer, and police is recording this conversation. Whatever the murderer, whatever the person is saying to the lawyer, this conversation, police is recording this conversation. And person says to the lawyer that yes, I have done the murder. Can police record this? Can police record this conversation, guys? No. Why not? Why can't police record this conversation? Because that's the privilege. That's a privilege. The person who has been accused, that's the privilege communication the person is having in that case. That's an attorney and the client privilege you are having in that case. That's why you cannot record this conversation. Same here. This lawyer cannot go outside in the court and says, yes, this guy has done the murder. This guy has told me that. It's a attorney client privilege. Point here. Anywhere else, guys, you have seen this? Anywhere else you have seen it? Other than the lawyer and the client. Any other relationship where you have seen it? Husband and wife is not the privileged communication. No. Correct. Good. Doctor client is that. Doctor and client is that. So that means if doctor is doing, this is the patient and you are doing the, let's say, plastic surgery of this person, of any celebrity, you're doing the hair transplant of a celebrity. So this doctor cannot go out and tell in the media that I have done the hair transplant of this person, of this plastic surgery of this celebrity. That's again the privileged communication. Point clear, guys, what I'm saying? Similar thing is similar kind of a communication is between the client and FATP, federally authorized tax practitioner. Same kind of a privilege they are also having. Similar conversation they are having also in practice. That's why everyone, IRS, whenever IRS is looking for any information, that please provide us this information. So whenever IRS is seeking any kind of information from FATP, that means you guys. Now, it is your responsibility to promptly provide that information. This information which IRS is looking, you are supposed to promptly provide the IRS. No dilly-dally, don't push the information, right? Do it, provide this. However, if you are having a reasonable ground, if you are having this reasonable ground, that whatever the information is asked by the IRS is a privileged communication, it's a privileged information, then you may deny by it. Is this point clear? Because generally it comes the doubt in our mind that with that logic, I can deny anything. Whatever IRS is asking me, I'll say no privilege. Whatever is asking, I say no privilege. No, again, it won't happen. IRS is not stupid. They know what is privilege, what is not in privilege in that case. So obviously you will have the idea about this, what is the privilege information and what is not the privilege information. So it's not like that you can discard every other information, whatever the IRS is asking for. Is this point clear, guys? Can I move on? Uh, if IRS is asking any information from the EA, if EA does not have that information, but client is having, then you can arrange the information from the client and provide that to IRS. Provide that information to client, to the IRS. If let's say client is not having that information, but some third party is having that information, right? Now it is not your responsibility to verify that information from the third party, because obviously to the client, to up to the client you can manage, but you're not going to communicate with the third party, check the information, whatever the information is there, is it correct or not? That's not your prerogative in that case. So maybe from the client you will collect the information and pass it to the IRS, but otherwise, point clear what I'm saying? Let's read it from the book. I think this is simple. Read this. Page number 5. Up till there. Everyone is having a book, right? I am on page number 5. Quickly read this. Up till here, read and confirm. Page 5. Clear, everyone? I hope it is okay. Right. Okay. Taxpayer has privilege. Taxpayer has privilege of confidentiality with FATP, federally authorized tax practitioner, with the regard to tax advice. Copy. Second one. However, this privilege, which we discussed about the client and the FAT, this privilege does not apply when this privilege is not going to work. It is not going to work in criminal investigation. It is not going to work in the criminal investigation. For example, if this is here and this is IRS. Again, against the client, there is any case is going on. Let's say any murder case is going on. Any kind of hawala case is going on. Right? Any money laundering case going on, which is more criminal in that nature, everyone. If it is not criminal in that nature, everyone, then you can't say it is the privileged information. You have to provide that information. You can't take the benefit of the privilege in that case. Point clear what I'm saying, guys? So that's why privilege does not apply to the criminal investigation. That means you have to provide the information in that case. Second, determination of an item on original tax return. As you done copying. What I'm saying in the second point, everyone. Let's see here. You have filed the return. Client has filed the return to IRS. And you are saying that the rent which I am paying, whatever I'm paying is $5,000 per month. Now, if the IRS is asking the details, let's say IRS is asking the details from you, that provide us the rent slips, provide us the agreement, what you are having, are you deducting the TDS for the landlord, right? So obviously, whatever the details they are asking in that case, you can't say, no, it's a privileged information. No, it's not a privileged information. It is something for you to determine the income item in that case. So it's not a privilege as such. Third, everyone, if it pertains to tax shelters. What is tax shelters, guys? Tax shelters. Tax shelters is basically any kind of the arrangement you are having, to avoid taxation. I'll discuss the tax shelters later on. So any kind of arrangement which you are having to avoid that will be considered as tax shelters. So here the privilege will not copy, then I'll move. Now, whatever I'm saying, everyone, this privilege, what I'm saying, it pertains only to the IRS. It pertains only to the IRS, not other authority. So that means I'm saying this is the client and this is EA or any FATP. This privilege is between you guys, but this works only against IRS, not against any other institute. Let's say SEC, Securities and Exchange of Commission law, under FBI law. It is only for the IRS only, not for any other government authorities. Point here. Just writing this. Tax practitioner privilege. Sure. Which point? SEC point. Let me write this. So this protects advice only against disclosure to IRS. Not other government agencies. Not other government agencies. For example, FBI, SEC. Copy this, guys. Guys, keep taking the screenshot of this. Most of the information I'm missing from the board. That's why I'm writing out the details. Okay. What I'm saying in this case, Netra, that client and FATP, for example, EA, they are having the privileged relationship, right? That whatever they are sharing to each other, it's a privileged information, but this is only against the IRS. Point clear up till here? If it is against if any other agency is asking for that detail, let's say SEC asking for that details, FBI is asking for that detail, you can't say, no, it is privileged information, I can't give you. You have to give that information. So that privilege is only for the IRS, not for the other government agencies. Is that okay? So if IRS is looking for any information and that information is non-criminal, it is regarding the non-criminal matter. Can privilege be taken? Can privilege be taken? Can benefit of the privilege be taken? Yes, it can. However, if FBI is asking for any details, let's say it is also non-criminal, can privilege be taken? Then it can't. IRS is asking for any detail, right? But which is criminal. Can privilege be taken? No. Same what we have done. Point clear, everyone? I'm just making a summary of it. Which is against it is against IRS or against quantity agencies. It is non-criminal. Yes. Is it here? Is the privilege here? Non-criminal matters is the privilege for with the government agencies? No. If it is criminal, it is against, not against IRS, obviously not. Something. Clear, everyone? Let's read it from the book. I am on page number 6. Read and confirm, guys. One tiny point, guys. One tiny point I'll discuss about the TRPs. Any questions, guys, up here? Piyush, any questions? Rajita, is there any questions? Samriddhi? Any EA, any EA is providing a tax advice to client. You're giving tax advice to the client. Then would that person be considered as TRP? Would that person considered to be TRP? No. Just because you are providing the tax advice, you are not considered to be the TRP nowadays. Correct? Sometimes they'll try to confuse you in the MCQ such options. So I'm just clarificatory note I'm writing that. Person who gives advice only on specific issues is generally generally not considered not considered to be more relevant from the MCQ perspective. Okay. Individual. Which return individual files, guys? Which return? Correct. They file 1040. How many filing status are there in US, guys? How many filing status are there? Guys, many people have done the part one. Single, married filing jointly, married filing separately, married filing jointly is also known as joint return, surviving spouse, and HOH, head of household. So there are 5 filing stages. Don't worry, I'll discuss this in part one much more detail. So what do you mean by these filing status, everyone? See, in India, do we file the return like this that I am married, so I am filing return number ITR1. I am single, so I am filing ITR2. I am having 5 kids, so I should file ITR3. Is that how you select the income tax return in India? No. In India, the criteria is different, everyone. In India, we pick the ITR on the basis of the types of the income you are having, the nature of the income you are having. So that means what you are having: salary, house property, capital gains, PGBP. So whatever the income you are having, on that basis, you pick the income. But here we are having different. Here on the other basis, we choose the what status you will choose in that case. Single, if you are not married to anyone, or maybe the person is divorced, then single. If the person is married, filing jointly, that means husband and wife together filing the return every month. Is this married filing separately? Is that filed by the people who are divorced? Is it filed by the people who are divorced as married filing separately? No. Married filing separately means married filing separately. That means these guys are still married, but they are filing the separate return. Separate return. Right. When we talk about joint return, that means they are filing the joint return together. Don't worry about the filing status. I'm not going into that. We'll discuss that later on. Why I'm saying discussing this, guys? Because if these guys are filing married filing joint, husband and wife, they are filing married filing joint. Then there will be one person who's preparing the return. Can this person be called TRP for both of them? Yeah. You are filing one return only and you are TRP for both of them. But if it is separate, husband and wife. For husband, A is preparing the return. A is an A. A is preparing the return for TRP. Wife, she is filing return self. But would A be considered TRP for wife also? Would A be considered as TRP for wife also? No. That is the point clear what I'm saying, guys? Partnership and partners. Does partnership pays the taxes, guys? Does partnership pays the taxes? Partnership does not pay the taxes. Partner pays the taxes. Does partnership file the return? Yes. Though you don't pay the taxes, still you're supposed to file the return every month. You file which form? You file 1065. Which form partners file, guys? They file 1040. Partnership is not supposed to pay the taxes, but still they file the return. That's why, if you remember, yesterday also I had done this. This return is known as informational return. Informational return, because you're just updating, you're just giving the information. That's why it is called informational return. Point clear what I'm saying, guys? Should I move? I'm just writing a note for this. TRP of one return is not considered TRP of another return, because entries on entries in one return, or I should not say the entries in one return, entries in first return, entries in first return may affect second. Copy this, then I'm going to discuss. Same thing I've discussed. TRP of one return. So that means in case of a husband is not considered to be the TRP of the wife also, because the entry in the first may affect the second entry also. So it might be impacting the other also. It is not considered to be the filing, it is still not considered to be the TRP of both of them. For example, I take that example. Let's say husband and wife, they are having the rental property. So here the rent is coming $10,000 and their ownership is 50-50. So husband is showing $5,000 rent and a wife is showing the 5,000 as the rent. But they are filing separately. For husband, A is filing. For wife, she is self-filing. But it is in a way linked, this information in a way passing on to both of them. But just because the information is passing on from one to another, it does not mean it one person would be the TRP of another also. It may be the case that husband is giving wife the gift. Some details of this would be going here also. Just because some information or details or entries are going from one return to another, other person will not be the TRP. Point clear, guys? Is the note clear? Now, this is general rule. I'll talk about the exception. So, TRP of one is not considered TRP of another because the entry in the first return may affect the second return unless. I'm moving unless in the next page. Unless. Unless entries are directly reflected on the other return. For example, partnership and partner return. And it represent substantial portion of second return. Understand? Generally, we said that whatever is the first is not considered unless entries, one entry is going to another, are directly reflected on the other return, everyone, and the impact is very high. For example, everyone, if I say, let's say this is the partnership firm. Partnership firm is having income of $10,000. It is having two partners, A and B. A is holding 95%. B is owning only 5% in the partnership. Is that possible? This A is having 95% in the partnership, B is having only 5%. Is that possible, guys? It's possible. Why not possible? Possible. So how much income would be of A? A's income is 9,500. B's income would be 500. Point clear? Let's see. A is also earning some interest and A is earning the interest of, let's say, $500. That's the only income A is having, 9,500 receiving from the partnership and $500 from the interest. So this partnership interest, if I look partnership share, what you are getting, is it substantial for A? Is it substantial for A? Yes. Almost 95% of your income is because of that. That's what we are saying. Directly reflecting on the other return. Yes, directly this income is coming on your return, which is 9,500, everyone, and represent the substantial portion of the second return. When I say second return, that means what return? Partner or partnership? Which is the second return? Partner or partnership? Partner. Partner. First return here is partnership. Point clear up till here, guys? Yes, no? Now, again, if I leave, some people will say 95% is substantial. Some people will say 20% is substantial. Some people will say 5% is substantial. It is going to be very subjective. That's why they have defined what is substantial, guys. What is substantial? So when we say substantial, everyone, substantial means, everyone, substantial portion when we talk about, everyone, it includes gross income more than $400,000. So whenever gross income is more than 400,000, which is coming from the other, we consider it substantial, everyone. Or it is something more than 20% of gross income of the return. That means overall, whatever your income, out of that, more than 20% is coming from the other return, then it is also satisfied. Point clear, guys? Copy this, please. Then guys, oh, I have a question, guys. These numbers which is given 3120 3120.01, is it section number? No, these are not section number. It looks weird numbering, right? That's why people get confused with that. That is it the section number? No, it's not the section number. It is just the referencing of the sergeant everyone. That's all. It's not relevant at all for us, right? So don't confuse with that it is some kind of a uh, so I got some technical issues. So I was saying here that if you remember, we talked about the TC 230. Remember? So I was saying this entire TC 230, this entire TC 230 is given at the end of your book, which is this TC 230 Appendix A, which is 103 everyone. A bit like this. TC 230, that all it is given. Should we learn that? Should we learn that? Absolutely not. Should we read that? I would suggest no, not necessary. Right? See, it's very different. It's very different in India versus US everywhere. Right? Generally, in India, if I talk about the Bear Act is very well defined and it's a lot of information, uh, lot of insight you get while reading the Bear Act. But this is not like a Bear Act. It is just a excerpt of that, but I don't think it is going to be at all relevant for you. So you don't waste your time reading this. In fact, when I was doing my CA, I in fact read it entire law, tax, everything from the Bear Act only, because then it gives you a lot of sense, right? In US, it is not like that. In US, if you really want to know that, then you should read the publications which is issued by them. Publication 17, publication 545. Those publications are very well defined. If you want to know the forms, everyone, those instructions on the forms are very well defined. Everyone. So I'm just telling you for knowledge that this is what is given in that case, but don't waste your time doing that unless it is complicated and for exam purposes, it is absolutely not necessary for you. In fact, whatever is there at the end of the book, pretty much we are covering in the book itself. Right? So just for your knowledge, allow me a minute, guys. I think my internet is working well. I'm just switching to Wi-Fi. Might be a trip for a minute. In India, guys, when you are working, which form your employer gives to you? If you are working with KPMG, which form your KPMG will give to you? Correct? It gives you Form 16. Similarly, in US, which form your employer gives you? Form is W. It gives W to you in that case. W in that case. I hope it is okay. Other than the employees, which form you give? Like, let's say I'm the consultant, right? I'm a consultant. I'm an outside consultant. Which form do you give in India? Form 16 is for the employees. For other people, which form do you give? Let's say TCS hired KPMG. That KPMG will provide the consulting to them, right? And now TCS is paying the money. Will you give KPMG Form 16 for the payment? No. Which form would you give to KPMG? Form 16? Correct. Form 16. In US, we are having similar, but variety we are having is called Form 1099. 1099 is variety we are having. 1099 DIB, 1099 interest, 1099B. So for various purposes, we are having various categories of the 1099 every time. Right? So W2 like Form 16, 1099 like Form 16. Is this point clear? All right. Individual, you have told me that individual files 1040. What is your due date of 1040, guys? That means if my tax year is 2023, by when I'm supposed to file my return? I'm supposed to file by 15th of April. Which year? Which year? Okay. For 2023, guys, I'm supposed to file my return here. My due date is going to be 15th of April 2024. Is that point clear up till here? Somebody clear? Now, if my employer, let's say I'm working, and if my employer is giving me W2, let's say on 15th of May 2024, can I file my return? If I'm getting W2 on this, no, obviously not. I can't do that. That's why there is a compulsion, there is a liability on the employer that you're supposed to give W2 to the employees by 31st of January 2024. So that the employee will have the sufficient time here, everyone. You will have the sufficient time to get the details and fill out the details. Is the point clear what I'm saying? Okay. In case person is supposed to give on 31st of January, right? This is the responsibility of employer. But let's say hypothetically employer is very lazy. Employer has not given you on 31st of January. That means will I not file 1040? Will you not file 1040, right? If your employer has not given by 31st of January, will you not file by 15th of April your return? You will file it. Even if the person is not given, you have to do it, guys, because it's a federal offense for you, right? Obviously, the penalty would be there on the employer or something. That's none of our concern. That can't be an excuse for you. That can't be an excuse for you. I have not received my 31st January. I have not received my W2. So how can I file my return? You have the pretty much good idea about what is your CTC, what is your salary slips you are already available in that case. In the bank account, you are receiving how much money. You have the decent idea about this. And moreover, let's say you don't have the exact fine-tuned idea about this, you can amend your return later on. But that does not give you the right, that does not give you the benefit of extending the return, would not give the benefit of missing the return. Point here, guys? Okay. whenever you are going to meet, this is the new client everyone. And new client has said, okay, you have become a new CA and we have hired you this time for my 2024 tax return, you will file that. Okay. So you are newly appointed by the client. This is the new client for you. How will you get all the details from the client? Will you start asking all the details that give me your income, give me all the details, salary slips, CTC, kids details, married, not married? Like you will keep on asking that person, or do you have a better way to start? One approach is that I am sitting on the head of the client and whole day I'm keep on asking the questions and writing it down. Do you have a better way to start? What is the first document you should ask from the client? What is the first document? Very good point, Aditya. Last year return is going to be the best portion for you to start everything. Is the point here? So you will probably ask the previous year return. Yeah, but I think the previous year return is the best point for you to start. Right? We can check on that basis that last year you were having this much of a rental income. Do you still have the rental income? Your salary was this much. Do you still have that? So it's a good start point for you. Point clear what I'm saying, guys? Let's say this is your client and that's you. Client has given you W2. Client has given you salary slips. Client has given you demat statement. What will you do with the demat statement? Why do you need the demat statement? For determining the capital gains. The client has given all the details. Now, salary slips, W2 also, demat statement also. Now, would you go and investigate behind the client that whenever the client is at home, you will go to the client's office, to the employer of the client, and investigate about this, that whether the person is actually working on that or not, how much is the salary of this guy actually or not? No, obviously not. You're not going to be Sherlock Holmes in that case. Whatever the information the person is giving to everyone, prima facie everyone, on the face of it, everyone, on the face of it, you are going to rely on that information. Is this point clear or not? Obviously, you are not going to investigate in that. However, whenever there is a clear contradiction you are finding, for example, W2 says that the income of that person is 100,000, and you have asked the client to file the questionnaire. Right? In the questionnaire, you are asked that what are the details in that case, and in that the client has filed that my income is 60,000. Is there any contradiction here? Yeah, there is a contradiction here. So whenever there is a contradiction, everyone, in that case, you are going to inquire. Is that point clear? Simple point, common sense, guys. So first time when someone is giving you any information, obviously you are going to take on the face of it, everyone, and accept that. But whenever you're finding any kind of a contradiction, you're going to further inquire. Should I move? Okay, let's see it. So that page number 7. As you run, guys. Now, I'll discuss few forms, guys, which you should be aware about this for the exam purposes. We have already done individuals on 1040. What is the form for C corporation? C corporation is 1120. What is the form for S corporation? 1120. And C. Partnership form, just now we discussed. 1061. Gift tax. Seven zero nine. State tax. 7006. These are the few basic ones you should be aware about this. Of this. Copy. Year is 2023, 2024. You have been appointed as an year, you have been appointed by the return. Last year return, you have not filed. Last year return, you have not filed. But while you were going through the return, in the return in the previous year documents, you find there are some non-compliance, everyone. There are some errors. There are some omissions. In short, I'm going to call it new. We are from matrix. So new everyone. It's not necessarily all the three have to be done. It could be anything. Maybe there is non-compliance or error or omission. You have find while going through the documents, you find new in that case. In this case, guys, in this case, what will you do? Are you going to complain IRS about the non-compliance, error and omission? Are you going to complain IRS, guys? Or better solution? Will you blackmail the client that increase my fees? Else I'm going to complain the IRS. No? Solution? No. No. You will inform the consequences. You will inform consequences of you. That if you don't correct this, what is going to be the consequences of that? Is that okay, guys? Is it mandatory for us to tell that? Yes, it's mandatory. It's mandatory for you to inform that. You can't change on your own, guys. You can't change on your own. You will just tell the client that these are the consequences if you have not corrected that. That means maybe this so much of the interest, so much of the penalty will be there. Maybe if you are not corrected, there is a jail time also. So all the consequences you have informed in that. Point clear, guys? Okay. Two things will happen everyone here. When you have informed the client about the consequences, client can amend the return. Client can make the changes in the return. Life is sorted to continue. But client says, mind your own business. Why are you looking to the last year? You have been given the responsibility of this year. Do that. So client says, I don't care. Do your job. Then what will you do? Now will you complain? Or close your eyes and file your return for 2024, or quietly file the return for 2024. Actually, you cannot file the return for 2024 also, because sometimes there are a lot of things which are carry forward to the next year also, everyone. For example, everyone, let's say year 2023, where there are mistakes. These are the year which is there are a lot of non-compliance error and the omission. Let's say here there is a loss of $100,000. Client has shown there is a loss of 100,000. If there is a mistake here, these loss is supposed to be carried forward. And as an EA, it is your responsibility to adjust that. So you cannot just focus on your current year return because something is carrying forward to this year also. How will you adjust in that? So it's not like that you mind your own year, you mind on your own current year will not work in that case. Then what will you do, guys? Remember the circular we have done it? Which circular? TC 230. TC 230 is also in a way silent on that. TC 230 has left the ball in your court. TC 30 is not saying that you resign in that case. No. Ideally, if TC 230 says there is a conflict, just leave that. Right? TC 230 is not saying that you resign that. They have left the ball in your court. They said in that scenario, generally, you should exercise the professional judgment. You should exercise your professional judgment. So now the ball is in your court in that case. Should you continue or not continue? Point here, guys. Oh, that's me. I am on page number 6. Read that. It is written code. Code means IRC. Yeah, ideally you should know, Mitra. That's what I'm saying. So that's what I'm saying. No one is giving you the concrete answer, but ideally, if there is such a problem here, you should not take up that assignment. They will take the actions against you. Yes. As you're on, guys. This is something we have already done, guys. EA may not interfere or attempt to interfere with any efforts by the IRS. You should not effort that. Obviously, you will not provide any information which is a privilege. See, we have done this. Same again as I discussed, the topic is in hodgepodge, guys, in your book. So read this page number 9. Same thing. Again, they are repeating the same page number 9. Read and confirm. Guys, what is solicitation? Solicitation. Anyone? Solicitation is basically you are procuring business, you are procuring any kind of assignment is known as solicitation. That means you are soliciting the business agreement. In this case. As an EA, you go to a client and says, I have a friend in the IRS. I have a friend in the IRS. Don't worry, you file the return with the IRS and I'm getting your guarantee you will get the 100% refund because I have a friend, I have a setting in the IRS and you will get the 100% refund in that case. Is this a valid solicitation, guys? Is this a valid solicitation? No. So everyone, we have defined here what is going to be allowed solicitation and what is going to be prohibited, everyone. That means you can't do that. So let's see. You want to take a screenshot? Please do. Okay, let's see. Prohibit. What is prohibited? That you are using the terms called certified. You write enrolled, but you can't say I'm a certified. I'm certified. Indicating employer-employer relationship with the IRS. Saying that I am the IRS employee as an EA, I'm the IRS employee, and I'll file your return in that. False, fraudulent, misleading, deceptive, or any kind of a coercive statement, everyone. That I'll file your return. If you don't let me file your return, I'm going to break your knees. No, no warning, no deceptive, nothing else. What is allowed, everyone? These are the allowed, everyone. I'll enroll to practice before the IRS. Many times, guys, you might have seen on the LinkedIn also. Many people will write enrolled agent, enroll to practice before the IRS, enroll to represent the taxpayer before the IRS, admitted to practice before the IRS in that case. Now, let's see. What is more prohibited? Assist or accept assistance from any person or entity that the practitioner know has obtained the client in violation of the 230 advertising or the solicitation. So if you know that this guy has misused that, and still you are taking the help of this person. Uninvited solicitation, everyone, of employment in the matters related to the IRS is not allowed. If the solicitation violates the state law or this. So if it is any kind of a violation of the state law or the federal law or any other applicable law, then it again it is not there. Point clear, guys? Up till here. Not assist or accept assistance from any person or entity that the practitioner know has obtained the clients in the violation of the advertisement. Same thing, that you are not taking the help of anyone in that case. Neither you are doing anything, nor you are taking the help of anyone who has done that. So that's a no. Allowed. You can put enrolled to practice before the IRS. You can say enrolled to taxpayer before the IRS to represent the taxpayer before the IRS. You can say admitted to practice before the IRS. A temporarily recognized person may not use the phrase. That means once you become EA, you will apply for the license, everyone. Then in between, there is a temporary period, everyone. In that case, I can't use that phrase. Once I have the license, once I have the identification number, in that case, only then I can represent it. An applicant granted recognition pending on this approval is not going to use that. Mail solicitation designed for the general public is permissible, everyone. That means when you're sending the bulk email, everyone, when you're sending the bulk email, that is something it is going to be okay. Mail solicitation for the non-tax services based on the specific tax return circumstances unit to the client recipient is not permissible. Bulk email, when you're writing everything, when you're sending bulk email, let's say I'm sending bulk SMS. When you're sending anything bulk, are you directing to only one specific person? Are you directing to only one specific person? No. So we are saying mail solicitation designed for the general public, if you're doing, it is permissible. But if you are doing the mail solicitation for the non-tax services, maybe you are providing the actuarial services everyone, based on the specific tax circumstances unique to the recipient is not permissible, right? So you're saying just like the I have done the work of this client, similarly I'm going to do for you. No. Making availability of the professional services known to other taxpayers is allowed as long as the person or contacted is not the potential client. That's the same point. You're not targeting to any specific audience. You're giving more generic in that case. It is something which is going to be allowed in that case. Let's see. Page number 7, everyone. Quickly read this. Okay. Page number 7. Guys, if any IRS employee, ex-employee, let's say, this guy has been suspended or disbarred, can you take the help of this guy? Any IRS, ex-IRS employee who has been suspended or disbarred? No, shouldn't take the help of that person. Read that. Page number 7. Read and confirm, guys, please. Any question, please let me know. Done, everyone? So, fee rules, everyone. Fees, that means whatever the fees you are going to charge from that client will become fees rule. Contingent and unconsignable. And EA may publish, and EA may publish the availability. When I say publish, everyone, it can be in any journal, it can be in any magazine, everyone, it can be in any newspaper also, right? So you may publish everyone the availability of the written schedule of the fees and disseminate. Disseminate means distribute, circulate, and circulate everyone. The following fee information, following fees information can be there. That means how much is the fixed fees for specific routine services everyone. So maybe everyone you are saying that if I'm if you are filing 1040, right? Then per 140, I'll take $1,000 for per 1040. So it's a fixed fees for the specific routine service. Or maybe hourly fees, everyone. You can have the hourly fees also. That means whatever the number of hours I'm going to work, for that I'm going to take $100 per hour. So maybe fixed specific fees you are having, or maybe the hourly fees you are having. Then you can have it on the basis of the range also. Then on the basis of the range, a particular. Generally, it is going to be more from a for a depending on how much is the because again, if I say 14040, let's say A is filing 1040 and B is also filing 1040. Is it necessarily the kind of a work which you are putting on both of them would be equal? Is it mandatory? No, we have done this. Maybe this guy is having multiple sources. This guy has only one source. So not necessarily. So that's why you are having a range also. That maybe that if you are filing the 1040, the range is going to be from $800 to maybe $1,600. So that's a range you are giving in that case. Then you are charging the fee charge for the initial consultation. You are saying that initially we are going to charge $500. After that, we are going to charge $80 per hour. It's not that everyone. Could be anything in that case. Point clear, guys? Whatever is the ops, everyone, out of pocket expenditure, you can agree with the client that the client will bear, or maybe EA will pay and later on will get the reimbursement. It all depends on that. So any statement of the fees information concerning the matters in which the cost may be incurred must include a statement disclosing whether clients will be responsible for such kind of a fees in that case, for such kind of a cost. Point clear, guys? Let's say here, your fees, whatever you are saying, within next 30 days, you can't change your fees, right? So for example, if you have announced that on the radio, from the announcement till the next 30 days, you can't change your fees. Maybe if you are getting it telecast on the TV, then from telecast, next 30 days, you can't change your fees. Same everyone, these days, more Google ads are more relevant. Google ads, maybe if you're getting it published on the newspaper also, any journal, any association documents. Right? So anyway, wherever you're getting published, everyone, you can't change it for next 30 days. In fact, the law says it that it should be 30 days or reasonable time, whichever is higher. Whichever is higher. So if it is higher, guys, can I say it is minimum 30 days? Can you say that? That means for the next 30 days, I cannot change the fees. Point clear, guys? See, why are we doing that? Right? For example, everyone, let's say you have given the advertisement here. on 2nd January 2024, you have given the ad that I'm going to file 1040 $20 per hour. Your rate is very low. Many people have come in. And when the person has come, let's say on 5th of January, the client comes, you say, no, no, no. It was a mistake here. It was a mistake here. Actually, the fees I'm going to charge is $200 per hour. You cannot change it. You should not change the fees for the next 30 days. Point clear what I'm saying? So everyone, from the publication, from the telecast, everyone, how many days you can't change? You cannot change for 30 days. You cannot make the changes. Now, whatever whatever you are having here, if you are publishing it, everyone, then whatever is the copy you have published. If you are telecasting on the TV, then whatever is the clips of that TV, everyone. You are supposed to maintain that. You are supposed to maintain all of that for a period of 3 years. For a period of 3 years, you have to maintain those records. 3 years, guys. Can I say 13 months? Yes, no? Yeah, 36 months. Why I'm saying so? Because in your MCQs, you'll find it interchangeably. Some place they are saying 3 years, some place they are saying 36 months, but eventually it is the same. So these two figures you should remember it, everyone. 30 days and 36 months, everyone. 30 days, 30 days you can't change, and 36 months I have to keep the record. Very straight questions would be asked from that, guys. Simple. Just learn that. Is this okay? What we are saying? Clear, everyone? See, same. I am on page number 8. Read this. Anyone, any questions? Let me know. Page number 8. Done, guys? Is it clear? The rest of it is okay, but is my screen visible? It's not. Yeah. Um, and EA may not persist. And EA may not persist in attempting to contact a prospective client if the prospective client has made it known to the EA that he does not reside to be solicited. What does that mean? It means just don't bug the client. If, let's say, an EA has said that I'm providing so and so so services to A. A says, okay, I'm not interested right now. Please, it's okay, don't share them. But again, you're continuously applying in that case. When the person is saying no, then you will not unnecessarily barge the person again and again in that case. So EA may not persist in attempting to contact the prospective client. If the prospective client has made it known to the EA that he does not desire to be solicited, you have said that please don't call again. I don't want to be solicited. So you should not pursue the person again. Again. Point clear? Okay. What is unconsignable fees, guys? That means exorbitant fees. Exorbitant fees. That means way too high fees. You should not charge. EA may not charge an unconsignable fees, everyone, in connection with any matter related with the IRS. You should not charge very too high fees. That means normally people are charging $100 for for that service, but you as an EA, you are charging, let's say, $10,000 for that service. Not too exorbitant. Why is that so high? Why we are saying it? Why that we are saying way too fees don't charge it? See, compensation, yeah, fees, compensation, same thing. I'm saying it should not be way too high. If generally people are charging 100 to 100, you are charging almost $10,000. Why should you not charge too high fees, exorbitant fees? See, maybe if you are charging way too high fees, everyone, then maybe it's a manipulation thing which happens. It happens in India also, guys. So generally, if this person is a CA and this is the client, that any case of the clients is under any scrutiny and assessing officer is asking for the bribe. So client is not dealing with the assessing officer in that case, right? Um, in that case, let's say assessing officer is asking for the bribe of 10 lakhs. So you pass on that money to CA and CA will pass on to the AO in that case. So maybe if we are paying too high fees, then maybe you are passing on a bribe to any employee of the IRS. Is the point clear what I'm saying? Here? So maybe client is giving maybe $10,000 to EA, and now via EA you are giving to the IRS employee. So manipulation can be there. That's why. Point clear, guys? Let's see if take a screenshot of this. What am I put this? First, let's see what is contingent fees. Contingent fees, guys. What is contingent fees? Okay, this is exorbitant fees. What is contingent fees, guys? Anyone? May not be chargeable. Yes, or maybe uh, if this happens, then I'm going to charge. If this does not happen, I will not charge. That is contingency. Point clear what I'm saying? So general rule is, point clear, Nidra? So general rule which I'm discussing, everyone, general rule which I'm discussing, contingent fees is not allowed. See that? General rule is contingent fees is not allowed. Then obviously we'll talk about the exception. Exception means it would be allowed. It would be allowed in that case. Is the point clear? It is something which is going to be allowed. When it is going to be allowed, everyone? When it is going to be allowed? Whenever it is depends on the outcome. For example, any kind of a examination on the return, claim for credit or the refund, everyone. Judicial proceedings, everyone. See scenario, in that case, it is something which is going to be allowed. Otherwise, not. Let's see that. Subject to the exception to be discussed, which we are going to discuss later. EA may not charge the contingent fees for the services rendered in connection with any matters with the IRS. This is a general rule. You cannot charge the contingent fees. What are the exceptions? What are the exceptions? Let's see that. EA may charge a contingent fees. So this is the exception, everyone. For services rendered in connection with the IRS examination of an original tax return, everyone, where the EA may charge a contingent fees for the services rendered in the examination or challenge to the original tax return. That's EA may charge a contingent fees for the services rendered in connection with the original challenge in that case. Maybe you're claiming any claims in the return, everyone. IRS is not allowing that. Now you're telling your client, don't worry. Whatever the claim we are claiming in that case, it is going to be correct. And I assure you, you will get the refund. If you get the refund, then you give me fees. If you don't get the refund, don't pay me the fees. Point clear? This is different. This is different than what I discussed earlier. Earlier, I told you that as an EA, you are telling your client that I have a friend in the IRS. I have known so many employees in the IRS and I know internal matter and I have the setting inside the IRS. So I'll get your refund. I'll get 100% of your refund. This is correct. Is that the correct solicitation, guys? That you're saying I have the setting in the IRS and I'll get your refund very easily now for you. No, that's not a valid solicitation. Second thing, what I'm saying is you are telling the client that whatever the stand we have taken on the return, whatever the position we have taken on the return. For example, I'm taking just an example, right, to understand with that. Generally, just for your knowledge, guys, I'll discuss with you in part 2, everyone. Generally, let's say taxpayer and the client, they have gone out for a meeting. Okay, they have gone for a meeting, everyone. And when they have gone for a meeting, they have ordered few meals. They have ordered the food over there. They have ordered the food over there. while having the meeting, everyone, in that case. So can taxpayer claim the deduction for this? Whatever the food the taxpayer is ordering over there, can taxpayer get the deduction for it? Yeah, you will get the reduction in that case. Let's say you have ordered the food of $500. How much deduction will you get? You get deduction 50% every. So how much deduction will you get? $250. Point clear, everyone? Now this is a general law. Let's say we are saying that your employees are working from home, and now they're ordering any lunch or dinner in that case from the home. Will you get the deduction for it? We don't know what is the law. Let's ignore that for the time being. As a EA, you are taking the stand, you are taking the position. Ideally, they should also get the reduction, and we should get the reduction of 50%. Law is unclear on that. So position what you are taking in this case, guys, that you will get the reduction in that case. Point clear what I'm saying, guys? And on that basis, you are saying to the client that definitely you will get the refund in that case. Definitely you will get the refund because whatever the stance we are taking is correct. Ideally, you should get the refund in that case. If you get the refund, then you pay me the fees. If you don't get the refund, you don't pay me the fees. Is it wrong? Is it any kind of a manipulation? Is it any kind of a fraud? Any kind of a bribe we are talking about? No. This scenario which I've discussed, that I have a setting in the IRS, I'll get your refund. Don't worry about this. And this scenario where you're saying that this is the position we are taking in this case, and definitely I assure you there will be a refund. Both the scenarios are same, guys. No, they're not. In the first scenario, it is more bribe thing you're talking about. In the second scenario, you are taking your skill. You're using your skill in that. So everyone, in the second scenario, you may charge the contingent fees. Point clear what I'm saying? So you may charge a contingent fees, everyone. You may charge the contingent fees for the services rendered in connection with the IRS examination or challenge to the original tax return. So if you are charging the fees for that, you will do that. Again, it is also available for the amended return, everyone. What we are saying this, everyone, this amended return or refund which you're filing within 120 days, which is available for us. Taxpayer may charge the contingent fees for the services rendered in connection with the claim solely in connection with the determination of the statutory notice in that case. That means what is going to be the interest, what is going to be the penalties, you can get them for that also. EA may charge the contingent fees for the services rendered in connection with the judicial proceedings, everyone. Same, if the case has gone into the court, everyone, judicial proceedings are happening in that case. Again, for that, you can also charge. This is not relevant for you, but they're explaining you what is contingent fees. They're explaining you. Contingent fees is any fees that is fee based on whether the position taken on the tax return or other filing avoids the challenge by the IRS or sustained either by the IRS in the litigation. That means whatever the stance we are taking the stance, whatever the food is ordered by the employees while working from home, that should be allowed as a reduction. Two things will happen. IRS may allow that. IRS may not allow that. Now, IRS allows that. Very good. Story is over. IRS does not allow that. Then probably we will challenge that. That how can you not allow this? This should be allowed. So I may go to the court also for that. I might go to the higher authority of the IRS for that. So same thing, everyone. Contingent fees is any fees based on whether any position taken on the tax return, everyone, avoids the challenge by the IRS or is sustained by the IRS in the litigation, or later on it might be sustained. Point clear, people? Contingent fees includes the fees that is based on a percentage of the refund reported on this, that is based on the percentage of taxes saved, or that otherwise depend on a specific outcome. So you are saying if your fees, if your refund, if you are getting 100,000 as the refund, I'll take 10% of that. So if your refund is 100,000, I'm going to take the fees of $10,000 in that case. Contingent fees also include any fees arrangement in which the EA will reimburse the client all of the portion of the fees in the event that position taken on the return is challenged by the IRS or not sustained, whether pursuant to the indemnity agreement, a matter, decision, or client in that case. Same thing, everyone. Let's say as an EA, you are charging the fees of As an EA, you are charging the fees of $10,000. And you are saying that you will definitely, you're telling the client that definitely you will get the refund of 100,000. If you don't get the refund, of 100,000, I'm going to refund my fees to you. So again, it is also considered as contingent. Point clear, guys? Clear, everyone? Now, a matter before the IRS, including the tax planning, filing a refund, and all the matters connected with the presentation of the officer relating to rights, privilege, regulation by the IRS. Such presentation include, but not limited to the preparing. This is something we are talking about. We are going to be presenting that. It's not a. Should I repeat, guys, if anything is not clear? No? Should I move? What is due diligence? What is due diligence? You know, due diligence. Take necessary steps. Correct? You should exercise the reasonable care. Basic point, everyone. Whenever you exercise, whenever you take up any assignments, whenever you're fulfilling your duties as the EA, you should exercise the basic due diligence, everyone, whenever you do that. Um, with that, page number 10. Done, guys? So to the last one. In determining the correctness of the oral or the written representation made by the to the clients, in determining the correctness. So EA must exercise the due diligence. EA must exercise the due diligence in determining the correctness of the oral or the written representation made by the EA to the client with reference to any matter administered by the IRS. Correct? So what we are saying is generally you are supposed to file the return. So the return due date is 15th of April 2024, everyone. You are telling the client that it does not matter the detail, the date is just like that only. Even if you're delayed with 1 month, it does not matter. But it is a wrong thing. You should inform that if there is a delay of 1 month, there would be an interest, there would be a penalty also, and actions may be taken by the IRS. It is your duty to inform the client about the consequence. If let's say this is an EA has provided the services to the client. Fees is $1,000 for that. Client has not given 1,000. Divide by one. Now, as in EA, you are providing the services to the client, and the fees is $1,000. Client has either not given your full fees. That means full 1,000 is gone. That means you are unpaid fully. Or the person has given $800. That means you are partially paid. How much? 200 is unpaid. In that case, can you retain the documents? As an EA, can you retain the documents? First, give me my money, only then I'm going to give you the documents. Can you retain that? No. So, point is, if the client has not paid, then ideally EA should return the documents. That's a general. However, if state law, if state law permits, then you may retain them. So you may retain them. Is that okay? Then you may keep the documents. However, if the client needs the document, the client needs the documents for the purpose of filing the return, or the client needs the return, need the copy of those returns for the purpose of filing the return, or if the client needs to review them so that they can file the return, you have to allow them. You have to allow them. See, problem is between the client and the EA, right? But if you don't give that information, their person cannot file the return. And that's going to be a federal offense, everyone. So whatever is your problem, because of which there should not be any federal offense. This is a separate issue you are having. For that, you can file a case against the client also. Whatever the action you want to take against the client, you can take that. But just because of that, you should not have any kind of a federal offense. You don't push the person to have any kind of a federal offense in that case. Point clear what I'm saying, guys? See it from the book. This is nice. I am on page number 15. Rules for returning a client's records in the documents. In general, EA must, at the request of the client, promptly return any and all the records of the client that are necessary for the client to comply with the obligation. Point clear, everyone? EA may retain the copies of the records returned to the client. You may keep the copies, whatever you're returning to the client, you can keep the copy of that. Existence of a dispute over the fees generally does not relieve the EA or the responsibility to return the client. I hope it is okay. Nevertheless means however. If the applicable state law allows or permits the retention of the records by the EA in case of a dispute over the fees. So if there is a dispute over the fees that allows the retention or services rendered, EA need only to return those records that must be attached to the return. You will return only those documents which needs to be attached to the return. EA, however, must provide the client with a reasonable access everyone to review and copy additional records of the client retained by the EA under the state law that are necessary for them to comply with the obligation. Obviously, you will give them the access, you will allow them to review that, copy that. Records of the client include all the documents, material provided to the EA, everyone, obtained by the EA in the course of the retention that pre-existing the retention of EA by the client. So that means when we say client records of the client, what do you mean by that? That means whatever is provided by the client, everyone. Records of the Records of the clients include all the documents, material provided to the EA, obtained by the EA in the course of the representation, that pre-existing documents, everyone. That means whatever is provided by the client, everyone. The term also includes the material that was prepared by the client or the third party, everyone, not necessarily employed. Maybe you are getting it verified by someone else. Maybe you're getting it verified by any actuary. So all of it, anytime, list back to the subject matter. Is that okay? The term client record also includes any return, refund, any other documents prepared by the EA or the employee agent that was presented to the client with respect to the prior representation, if such document is necessary for you to comply the federal tax obligation. So something which is necessary for you to comply, we are going to include that also. The term does not include any document prepared by the EA or the employees of the EA. If withholding such documents pending the performance, everyone to pay the fees with respect to that. Other than that, everything is going to be included. Copy this. Please dispute. Let's go. In general, in general, a practitioner must promptly return all documents necessary for the clients to comply with the tax obligation. Practitioner may retain a copy of the records returned to the client. You can keep a copy. If applicable tax laws allows that for the dispute, you must return. Generally, these are the client prepared documents. Generally, these are the documents which client has prepared, which has given to you salary slips, W2, whatever the client documents. Records of the client for this purpose would not include a schedule prepared by the practitioner that provides the mathematical details of a particular item in that case. So maybe something which is prepared by you as an EA, as an employee, maybe that will not be included in that case. Point clear, guys? Um, we'll do 10 minutes more, then we'll stop for a break, guys. In India also, guys, if you are talking about any auditor, is that possible that auditor is taking the help of any other person? Or it is taking the help of another person? Yeah. possible that auditor is taking that. Okay. Whenever you are taking the help of any other person, is it your mandatory for you to check the 100% guarantee of that person, that whatever the work the person is taking, you're taking the guarantee of that person? No, not necessarily. Right? Typically, we call it the work product of another person. Same here, everyone. As an EA, you might be taking the help of some other person. Let's say actually, you're taking the help of an actually, everyone. This is work product of another person. Now, would you be responsible as an EA? Would you be responsible for the work of another person, guys? No. See, how will you check this? If you are so expert in that matter, why would you hire actually in the first place? Right? Actually, is just an example. Right? If you know how that needs to be done, why would you hire the another person? You will do on your own. Since you are not, that's not your domain, that's not your area of expertise. That's why you have hired the other person. So how can you check that work of that person? What you should do in that case, everyone, you should, whenever you are hiring that person, as an EA, whenever you are hiring that person, let's say actually whenever you are hiring, you should do the due diligence. Whenever you are doing the hiring, that's where you should do the due diligence in that case. That means what is the qualification of that person, um, what is the experience that person is having, how much relevant experience that person is having, what is the reputation of that person, everyone. So all of these consider things you are going to due diligence before you hire the person. Point clear? Maybe fees also, how much the fees the person is going to charge, how much is going to be the money. Yeah. Or let's see it from the book. Page number 10, quickly read this. Read and confirm. Is that okay? Clear, guys? All right. I think let's stop for a break. Um, I'll see you guys at 9:15. We're going to start. Thank you. All right, everyone. We'll discuss from the beginning. Hopefully, you have not all the answers. In between, I have missed a few questions because those topics we have not done. So I'll discuss them later. Yes. So everyone, what is the answer here? Well, you should try questions. Or the following, which of the following is not considered practice? Preparing the tax return or furnishing the information at the request of it is not. Correct. See the answer. Which of the following is not practice? Correct. Preparing a tax return for the individual is not practice. I'm doing it fast, guys, because I have already run through these questions. People who have already done this. D. Question is different. Which of the following is considered practice? Preparing a tax return is not a practice, Mitra. Piyush. Appearing as the witness is a practice. Piyush. If that's the scenario, why have you not given the answer previously? No. Appearing as the practice is the practice. No. 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 Answer is no. Point clear, guys? Netra clear? See, that's the classical illusion, right? We are discussing here not practice, not practice. Automatically, we think that here also it is not practice and we choose it. Right? Careful. Easy. Which of the following is not practice? Right? These not practice. Point clear, Piyush? Which of the following is not considered as the practice? This is practice, this is practice, this is practice. Furnishing information at the request of agency. Easy. Correct. Not an example of the practice, rendering the written advice on the IRS. Easy. Maybe sanction for all of the following. Gross incompetence, yes. Prohibition, yes. Willful, yes. All of the following. Which type of the solicitation constitute? Which type of the employment solicitation? No, it can be both. Huge. It can be disbarment also. It can be suspension also. Why not disbarment? Can be disbarment also. So yeah, this is the answer. Easy. Which of the following is considered as a disreputable conduct? Conviction of the criminal offense, yes. Giving the false information. Conviction of the criminal offense, yes. All of them. Which of the following is considered as disreputable conduct? Willfully preparing and signing the tax return which you possess is correct. Willfully presenting unless your advice is correct. Willfully failing to comply with this case. These ones. All of the following are considered as the incompetence and the disreputable conduct, except failing to sign the document prepared as required by the. Which of the following considered is the disreputable conduct? That means which is not the disreputable conduct, isn't it? Which is not the disreputable conduct. Failing to sign the return prepared by this, unless the failure is due to this. No, failure to sign the return, it is the disreputable conduct. We are looking what is not the disreputable conduct. willfully disclosing the refund with the consent. With the consent, if you're giving that, with the consent of the taxpayer, if you're giving any information, it is not the disreputable conduct. Please answer. Point clear, guys? This would have not done. Sorry. I think from here, am I right? 90. Thank you. Anyone? Correct. This is the answer. All of the following. You have to exercise the due diligence in all of the following. Will be sanctioned, will not be sanctioned, and enrolled. A person will not be sanctioned for filling this and enrolled agent complete all the tasks. Complete with the taxpayer himself. It's not mandatory. Nitra, it's not mandatory. You have to complete all the tasks with the presentation with yourself only. I can take the help of someone else also. Point clear? So no, one is wrong. Correct. So correct. Answer should be C. This is easy. EA must exercise the due diligence in doing all of the following. Correct. Practitioner relies on the work of the others. The practitioner uses reasonable care in engaging on them. Correct. Both are necessary. Must exercise the due diligence in determining the correctness and the oral representation, yes. In preparing, approving the final tax, yes. In determining the correctness of the oral and written representation, yes. These answer. Correct. All right, guys, I'll stop it here only. I know this is a little boring, but can't help it. That's why I'm trying to mix and match by making a lot of notes, discussing the concept, then reading the book. Because if I continuously read the book, you will find it very boring. Uh, but can't help it. Part three is a little boring. That's why I'm trying to incorporate more and more MCQs with you. All right. Great. I'll stop it here only. I'll see you guys tomorrow. We'll start 6:30. Bye bye. Good night.